Hey everybody, this is Jose here. How are you everyone? It's a pleasure to be ready for the session today. This is a sound check as well. We are about to start in a few seconds. Please let's use this time to confirm that you hear my voice. Please give me a quick message on the chat box. That would do, so that way I know everything is good and ready to go. Thank you. Very nice. Perfect everyone. So we just reached the top of the hour. So let me maximize our introduction slide so we can introduce the session and begin. Very nice. Thanks for the confirmations. And by the way, let me turn on my cam as well, so you guys can see me while I am connected with you guys, which is getting us a little closer, isn't it? How are you, everyone? So let's begin with the session. Today is 29th of December 2019. My name is Jose Blasco. I will be your guide in today's session, and today it's sharpening. Actually, it's the last sharpening session of the year, which makes it very special. We have multiple subjects to be discussed. In the last session that we went over, I was asking you for a little bit of homework. Many of you have been sending emails, so I have multiple messages and ideas and thoughts and needs that you guys have been sharing with me to be discussed today in the way into entering 2020 as a plan for next year. Okay, but before we start, okay, and we start sharpening, we have a disclaimer, so I'll read it quickly so that way we are ready to go. So disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand and agree that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And this takes care of the introduction, and therefore the session is officially introduced and we are ready to go. Okay, so here is our presentation. Today we're going to be diving into all sorts of tools. Of course, today being Sunday, the markets are closed, so just like when we run any other sharpening session, we are ready to move right and left into any particular question, need, approach, new theory, additional technique, etc., etc. And as I was saying earlier, today it's such a special day. Okay, so let's get organized for today. Normally, when we do sharpening, we normally take up to 2 hours of our time to go over everything we need to. Today, I'm not sure, to be honest, how long it's going to take. It may take less than that. It may take more than that. So whatever amount of time we'll need, we'll just take that time. So we make sure that everything is properly answered today, since especially being the last session of the year. So I want to make sure everything is answered. But again, basically, in my mind, today, putting on the side the breaks that we're going to take, we'll take breaks every 1 hour. But putting that on the side, in my mind, there are two main portions of today's session. Okay, one portion of today's session is discussing the 2020 plan. Many of you, as I said before, have been doing your homework, sending me emails, messages, sometimes Word documents, PDF documents with a lot of detail concerning what are your plans as a trader for 2020, and we need to discuss all of this. So that's one portion of the session for today, and maybe you have not sent it, but in your mind is clear. So feel free at any moment in time to use the chat box to type in it and describe what is it that you are looking to accomplish into next year. Again, one of the key reasons why it's important that you phrase it is so I become more aware. And therefore, I lead in our company. I lead initiatives in order to put in place tools that will help you to get there. It's that simple. Okay. The second portion of the session for today would be kind of like a normal Q&A day, if you wish. Okay, so as always, we have received a collection of emails with trading questions. And certainly I have a collection of questions ready that I would like to answer during today's session as well. But also just know that if there are additional questions that you may have, you can certainly use, again, today's session and type your questions in the chat box anytime. You don't need to wait until later. You can just type your questions, and later on, when the right time it comes into place, I'll go find your question and discuss it with you, give you answers, and therefore everything is properly answered. Okay, so that's the plan for today. Two sections. Okay, section number one about 2020, section number two about anything when it comes to trading questions that you may have at this time. Okay, and I'm super excited to see all your names here, and I know that some of you are normally busy or not available at times during the weekend sessions and so on. And I can see that some of you are here with us today, which means that you are doing an important effort to join us, which is greatly appreciated. Again, today in my mind is a very important day, an important session, because I'm going to be collecting from you what your needs are. Of course, in my mind, I do understand certain things that in my mind are already needs that you have and I need to help you with. But at the same time, getting into the subtlenesses of everything that you need and what your goals are, money-wise or any other type of goal you may have, it's critical. Okay, so thanks for being with us today. Super special session, as I said. Okay, good. So let's begin with the first portion. Okay, first, very quick here. This is the calendar for the sessions that are already in the works. So today it's December 29. We are getting to the for sharpening. Tomorrow we'll get together again. Tomorrow will be the last session of the year. Okay, Monday, December 30, we'll be doing short-term trading. So we'll be trading the futures on the Forex markets. Okay, again, that's going to be tomorrow. Okay, so keep that in mind. We may see again each other tomorrow, but the time to ask questions, the time to plan for 2020 is today. Okay, so talking about planning, what I'm going to do is I'm going to bring into the main screen a Word document. Okay, so we can do some typing here, because I was going to say problem, not really a problem, but the one thing that does happen though is that many of you have been sending a lot of detail when it comes to your needs into 2020, your plan, your goals, etc. But you've been so kind. The majority of you have been really, really kind by not only telling me, hey, I want to accomplish this and that's it. You've given me a lot of personal information about your own situation, where are you coming from, what are your experiences, what are your struggles. And long story short, a lot of that is quite personal. So even though many of you didn't ask to keep it anonymous, somehow I feel that There are certain things that maybe you send for me to read, kind of like for my eyes only, and I obviously want to be respectful of that. Okay, so what I'm going to do is I'm just going to copy paste in that blank Word document. I'm just going to copy paste key paragraphs of some of you that belong to some of you. Of course, if it happens to be you, you will immediately recognize that's you, and then we can talk about those needs, etc., etc. So we can talk about it, without kind of revealing, too much information that maybe, as I said, personal, even though you didn't ask specifically for it in some cases, but I kind of felt this is the case. Okay, Dirk, Jose, since a lot of OT students change to testy work, testy trade, is there a change that you work on UFOs for testy work and auto climate? Good question, Dirk. Orlando. Yeah. Well, so I think that I totally agree with Orlando. This is a very good question, and it's funny because the first email that I received concerning homework was actually asking the same question too. So it's interesting. But anyway, so what is the lesson to be learned, right? In life, when we take decisions, many times. We take decisions with the best intention, with our heart and also with our brain, with the best intention, and then life gives us a lesson, right? And then we better learn from that lesson. So what has been the lesson this year? This year has been a massive year. Putting on the side OT students, which of course I do know very well this community, as I was part of it myself years ago. But putting that on the side, in general, what has been happening in the US when it comes to brokers? Well, there is a massive revolution going on, isn't it? To me, it's really a massive revolution like I never seen before since I started trading myself. So trading for free, trading commission free, okay, this kind of Robin Hood type of concept of trading is something that became a normal thing, and therefore switching from broker to broker or not having any disadvantage by using other brokers, it's now becoming a normal thing, where before, if you wish, it's like, okay, maybe you stick with this broker because that broker got better commissions, whatever. Now, for many of the assets, stocks, ETFs, even with some brokers options, futures normally not, but for most of the brokers is all commission free. They make money in other ways, isn't it? So what happens that the lesson to be learned, as I was saying, is that committing too much to brokers is actually a big mistake. So somehow in the question that you are phrasing there, and some other members of our community also consulted with us, you are suggesting that it would be handy, it would be cool to have the tool integrated with Tastyworks. And I get your point, and let me tell you, I do agree from a convenience point of view. But at the same time, if we were to rely all our efforts on one broker, one platform, next thing you know, we become too dependent. If something happens to that broker, or in this case, something happened to OTA, where they had the developments of Click absolutely... I'm not sure how to put it to be properly accurate, but really in a beta phase, not ready for the public yet. And next thing you know, they got an issue with their broker partner. So next thing you know, the whole community is now in trouble, right? So the idea, and this is why you also need to know, this is why, apart from utilizing one of the brokers, such as TradeStation, which certainly is one of the key brokers in the US at the moment, we also have all our technology available in a platform which is not related to brokers, which in this case is TradingView. Sure, it is that some brokers can connect with TradingView, and you could execute via TradingView, which has, again, certain level of convenience. But that is absolutely not the reason why we developed our tools in TradingView. The reason why we developed our tools in TradingView, it's there is a collection of reasons, but one of the key reasons is that way we become country agnostic, broker agnostic. We just don't care what's happening out there, because we know through times things happen. It's just like, if you think about it, what happened to the Forex markets in the US, or what recently happened to the Forex markets in the UK, where there used to be amazing markets with amazing brokers, with amazing regulation and also amazing leverage. And next thing you know, regulation got very tight, leverage got very limited, 30 to 1, 50 to 1, it used to be 400 to 1. So when those things happen, you want to have freedom of action as much as possible. Okay, of course, sometimes regulation is healthy, sometimes residency, for example, limit us on which broker to use, which accounts to set up. But basically, what I'm trying to say is that the lesson to be learned is that we want to be as free as possible and as little limited as possible. Actually, if there was no regulation at all, somehow it would be more advantageous, isn't it? Uh, so, um, so the long story short is we may develop our apps for other platforms. Tastywork, to be honest, could be a candidate, just like Thinkorswim. And the reason why is because they are both developed by the same developer. It's a Russian company, and it's the same story. So certainly we had chats with them, and we may end up integrating those tools there. But in the other hand, my priority would be more supporting you on how to trade. And I want to share, by the way, as well, some of the things that I learned myself as your coach this year working with you, which will lead into certain actions into 2020, which I believe will be of great help. And that to me is going to be a higher priority compared to developing the app for other brokers, because again, now you become dependent of those brokers, which it's kind of going against the lesson to be learned. So convenience, I'm okay with that, and of course I get it. Of course we are all traders here, so I get that. But at the same time, the life of a trader, is to be surrounded by tools and be used to be surrounded by tools. So doing your analysis with TradingView, executing with Tastyworks, or doing your analysis with TradingView, executing with Oanda, or doing your analysis with TradingView and executing with interactive brokers. That's our bread and butter. I use multiple accounts myself, and I got all those different broker platforms installed in my computer, and I just click right and left, and depending on what I'm trading or the purpose of my trades, I use a broker A or broker B, and I don't want to be um, I don't want to fall in love. Just like we don't fall in love with markets to be traded, you don't want to fall in love with brokers either. Okay. Sure, it is that Tastywork has a very, very nice platform, nice user interface, very innovative, by the way. At this moment in time, probably one of the most innovative. But guess what? 2 years from now, they will be outdated compared to broker C that will have a more innovative user interface at that time. So again, as a trader, we just don't care. Okay, and we don't care with a feel of responsibility, because I'm not saying we are careless, but we do have a carefree state of mind where we use whatever tool it's useful and give us the flexibility that should be the priority. So pretty long answer to your question, but I did want you to understand all the angles, because again, it's a common mistake among traders, and Dirk, you are very experienced, so I know this is not your case, but it's a common mistake among traders that sometimes we develop this affection, and we fall into the trap of the only thing you want to do is to follow that broker, trade that stock, trade that currency, trade that market. And we need to be adaptable and just go with the tools and where the money is. It's just like maybe you have a great year trading crude oil, but maybe next year crude oil is going to be a boring market. So I mean, I doubt it, but what if this was to be the case? Well, then you stop trading crude oil and you trade something else, and it has to be effortless. You don't need to feel pain or feel it's a difficult decision to be taken. You just need to be adaptable, right? Which is an important skill to be developed. Cool. Let me see. Bojan, we could all send an email to TradingView to accept Testify as a worker. Yeah, you could certainly do that as well, Bojan. Now, believe me, TradingView doesn't work like that. And also, let me tell you, they are already in the works of creating that integration. So, of course, I don't know their priorities and their timelines, but just like with Thinkorswim and IB, there is also a project working with Tastywork to be integrated with TradingView. Certainly, TradingView is and will be the most advanced and successful web-based trading platform in the world, which it is already, and it will be even more in the future. So any other web-based platform will have a pretty tough time, in my opinion. How are you, Ricky? Good to see you. Yeah, Bojan, don't be rigid. Instead, be adaptable. That was one of the 10 do's and don'ts, isn't it? Good one. Very nice. Okay, so let's begin with some of those texts that I was mentioning. Okay, that you guys have been sending me. So let me see. Let me copy. This is the key paragraph. Okay, so I'm just gonna copy it here. Here we go. And I guess I need to make this a little bigger. I'll just make the font to be larger. Okay. Cool. So one of you said, okay, one of you said, my big goal for 2020 is to learn how to trade futures and forex. I haven't traded any forex yet, as I need to review the class recording again with regard to the stops and the targets. I'll start with demos and paper money first. Okay. So let's talk about all of these, okay? Because again, it's perfectly said, by the way, and I think it's a great goal, okay? The trader in this particular case, and again, I will skip using your name, even though you know who you are, isn't it? But basically, the trader here knows very well where she's at. Um, she knows very well the time and effort she has been putting in place already. She got certain level of control of futures and understands the importance of managing correlations, being diversified, and therefore wants to expand into forex. And this seems to be a great goal. Actually, this trader attended the forex online class that I conducted myself in November, which, by the way, will conduct another session, another series of that class in January 20 to January 24. In case you're interested, you can shoot an email, and I can ask my team to send you more detailed information about that. I think we talked about that before too. But basically, once you attend the class and you have the recording, so she's planning to do, as part of her homework preparation for 2020, review the recordings. Why? Because the stops and targets are critical in forex. For the ones of you not trading forex, and for the ones of you that may be planning to trade forex into 2020, forex is a decentralized market. Being decentralized, it means that all brokers will provide different prices. It's the difference between brokers has to be subtle. It cannot be a major difference between brokers, but there will be a difference. Meaning that if you were to have your stops too tight or your targets not well set, you may see price to stop you out, and then the market goes your way, or you may see yourself missing a target or an entry by 1 pip or 2, and then you wonder why. So given the fact that forex is decentralized, it's very, very important that you certainly get very good at understanding stops and targets. Also, because when you trade forex on your charts, the charts show you the bid price, and every time you buy, it could be buy for an entry, buy for a target, or buy for a stop. Every time you buy from the ask. But when you trade forex, the chart shows you the bid. Okay, so there are certain things to be done, and I'm glad to see that the trader here is planning to start with demo and paper money first to get accustomed to this new market. In the end, trading is trading, and you can use all the tools, all the rules that we use when you trade futures. You can do exactly the same. But certainly there are a few subtlenesses or nuances that it's important for you to practice, to master, to feel confident about. So when you start with real money, you feel ready for it. So that way you have this peace of mind. You feel no stress, you feel no emotional pressure, if you wish. And therefore, when you execute your trades, you have an easy time identifying if the setup is valid or is not. So I have not much to say, but to say when it comes to this goal that this is very well phrased. It makes a lot of sense. And the only thing I would suggest to add here for you is to set a deadline. Okay. Make a plan with dates, which, by the way, this is something I would like to say to most of you that have sent your homework. Most of you express in with more or less detail what you plan to do for 2020, but very, very few of you ended up putting dates, and that opens a wide door to procrastination. And I'm not saying that some of you may be procrastinating and that's why you didn't put the dates. What I'm saying is that sometimes procrastination happens in the subconscious mind without being aware that we are procrastinating, but we are. And one way to fix it is to just set deadlines for things. You can be more or less strict with the deadlines. Maybe you can have, option A and option B for the deadline. You give yourself two options to give yourself a little bit more comfort if you wish, but at least setting dates would get you into doing instead of get you into thinking about it or planning for it, but you never get to do it, right? And it's very important that you push yourself to be accountable with yourself. One way to do it is to use deadlines, and the second way to do it is to commit to others. Okay, here in the community we are many of us, we are trading, we are connected. We got Discord groups, we got the Telegram group, we got the YouTube channel chat box, etc., etc. Well, tell others you are doing that, right? Tell others about the deadlines you selected. So if you tell someone, you know what, in February is going to be my deadline for me to start paper trading. So when March comes, some of you may ask your trader mates, hey, how did February go? It's now March. You told me you would start doing paper trading in February. How did it go? Right? And that's going to push you to be accountable and basically keep your integrity high. And what I mean by integrity in this case is I'm defining integrity as doing what you said you would and doing it on time. So that way you would kind of force yourself in a healthy way to make your goal to become a reality. I'm not saying that as you apply all of these, everything is going to be smooth. You also should expect challenges along the road. And when a challenge comes, you'll have to rectify, you'll have to reconduct, redirect, whatever that is. And maybe then instead of February, it was March or April, whatever that is. But having that initial February date, if you were to use February, it will get you working or moving towards the goal instead of next thing you know is it's Thanksgiving next year, November 2020, and it's like, oh my God, I wanted to trade forex this year and it didn't happen. Okay, so again, in the case of this particular trader, she's been doing an amazing work behind the scenes of putting work and effort. So I'm pretty positive that this statement is really authentic. And I want to congratulate you, by the way, for that, because obviously I'm well aware of your steps. But at the same time, what I'm missing there is using some sort of a date to help you push this into real instead of just an idea that was a great idea but never became a reality. Okay, so that would be my comment. Okay, so that would be one of the first homeworks that I received, and I'm going to move into the second one, but I have a few questions here, so I want to read first just in case your questions or comments are related. Let me see. Ricky, good morning, Jose. I just took my first class on options, and you can touch on how to get more experience with the options and platforms to use as well. Yes, very good. So I'll talk about that later on, Ricky. Good one. Muglis, are you to analyze the trend? There are additional indicators, EMA 200 and EMA 50. Good. So we're talking about technicals there. Okay, so your questions are technical, so I'll move those questions into the second portion of today's session. Okay, if you don't mind. Very good questions, and very happy to talk about it afterwards. Mark, how about setting a certain number of trades as a target instead of a date? What about both, Mark? You set a date and you set a number of trades, right? Because again, procrastination happens at a subconscious level. That's the tricky part of our brains. Okay, our brains have, I'm going to say something silly. If some of you are experts in human brain and psychology, you are probably laughing about what I'm going to say. But it's kind of like we have a brain inside of a brain. Okay, we have a smarter brain inside of our brain that tricks our brain. You know what I mean? So let's say you put yourself a date to get to a certain level of collecting a number of samples to understand your expectation and go from demo to live, etc., etc. But let's say your initial 5-10 trades are not too good, which could happen. So the inner brain may trick your other brain, which makes no sense to explain it like that, but you got my point. And what may happen is now unconsciously you start finding excuses to not to take the trade, and therefore basically it's almost the same as not having a deadline. So if you want to use I would say having a deadline is more important than a number of trades. And then if you want to make the number of trades a second objective, during the time you have from now until the deadline, I'm going to take minimum 50 trades. That may mean you need to take 8 trades a week. And, so if this week you have taken 6, so now, next week you have to take 10. Well, why not? Sounds good to me. But have a date. Because if you don't have a date, again, you may have that other brain trick your brain. You know what I mean? Yes. Maca, that's actually quite accurate. Well, I don't know. I'm all about sometimes looking for ways to explain things and analogies and simplifying a little bit things. And sometimes I guess that if we get creative that route, sometimes you end up in a good place. Sometimes you end up in a not very professional or technical explanation, and I kind of feel that was the case this time. Orlando, Jose, take a survey to assess in the group success in terms of making money so far in 2020, in 2019, following the trader rules we are applying here. Yeah, that's a great idea as well, but at the same time, we also need to understand the amount of time each individual trader has been in part of the group. What is their style? We need to divide the traders, and do groups: the swing traders, the non-swing traders, the intraday traders. So certainly, I'm happy to go ahead and maybe later on in 2020, as you communicate with us and you are confirming your styles, your deadlines, etc., etc. Maybe I'm very happy about your proposal, Orlando, because again, it's another way to keep each other accountable, where you also keep me accountable, and kind of I'm part of the equation. So I really like it. It's also kind of like, let's call it a little bit of a trading competition, right? Because if we were to pick a date sometime in 2020 and say, hey, on that date we will all report our results, something like that. So you know what, it would be a good one, in the sense that we would probably be able to use that as a little bit of a motivator to take a few more trades, or put a little bit more effort into the practice and so on. So I like your plan, but as a group, I'm not sure we have spent time enough all together. Okay, there are many members in the community have been with us for not so long. Where some of you, which is your case, Orlando, you have been there since basically Tradictive exists, right? Which was last year. So yeah, so I'll make a note in any case. Okay, I'm making a note of that because I love what you said, and maybe we'll revisit that somewhere later in 2020. Okay, so let me make a note of this. Yeah. So I'm making a note. Love it. Love it. Love it. Perfect. Muklis, how to get long and short positions, and long and target and short targets. Okay, good. Perfect. Good question as well. That's a technical one. So I'll get back to this question in the second portion of today. Okay, I'm going to get now into the second question. That was the homework. Or so let me copy and paste. Okay, we have another trader here. Let me see. Just copying. Okay, so copy. Okay, and right click paste. Here we are. Oh, I think I went a little too large with the font size. Yeah, way too large. So let me go back to a normal font size. Something like that should do. Cool. Okay, so trader number 2 in this case said, my goal in 2020 is to learn to be a better trader, to number 1, preserve and grow my inheritance, number 2, earn a comfortable living through trading, number 3, establish a portfolio that I can manage into my retirement years. And your methodology has given me a clear picture on how options work and how to leverage it in my trading. So using options, okay? Good, so perfect. So now here we got one more component. Of course, my comment to this is that, first of all, I love it. Why? Because you are hitting on 3 very important components that should be part of your goal for all of you, which is number 1, safety. In this case is number 1, right? Preserve. So preserve has a lot to do with making sure your capital is not hurt. No matter what capital that is, that should be a major capital rule for all traders, isn't it? Preserve your capital. So I love that. Earn a comfortable living. So we are talking about here, I sense that some of the capital for this trader is planning to be devoted for short-term trading. So here, what I would miss there, it's a little bit more detail, which assets, maybe forex, maybe futures, to create that comfortable living through trading, and then establish a portfolio that I can manage into retirement years. So now we are talking about long-term investing, okay, like really long-term investing. And here, again, what I miss here is kind of what I said before, adding deadlines. When it comes to the asset, at the bottom it says options. I'm not sure if this trader is planning to use options for everything or only for the long term, for the retirement money. So this would need to be detailed a little better. Okay. But apart from that, what I would like to say is that, and this is on my end, so I'm going to make another note for myself. okay, which is one thing that will add into 2020. Okay, you will see it reflected as the year progresses. You will see it in the calendar and so on, and I will inform you as the year progresses little by little. But certainly something that we have not done in my mind properly or enough or both properly and enough during 2019, it's doing sessions that talk about retirement, like long term investing. Sure, it is that we have run sharpening sessions to talk about portfolio management. We did talk about long term trading. We did talk about holding positions and overcome weekend risk. So, indirectly, we did kind of talk about it. But when it comes to running trading sessions where we put a portfolio together, we identify the opportunities, we run all of this together, and I guide you in a way that is closer to building a portfolio and managing it, to build long-term capital or manage that capital long-term, into all the way retirement years. That is something that we have not done. Okay, so you should expect, and you will see during 2020 us adding such type of sessions, okay, and such type of tools to help you and support you on how to do that more and better. Okay, cool. Orlando, in the end game, at the end. Okay, yeah, I read all of this already. Yeah, I thought there were new messages on the chat box. Good. Okay, so yeah, and guys, feel free to uh, add or comment on what I say anytime. Okay, so I'm looking now at trader number 3, and I'm just gonna copy here from trader number 3 her text. Okay, so let's go for it. So she says, in 2020, I would like to continue to practice all I have learned and put it to good use. I would like to take back my all of my investments and 401k and create a portfolio that for a long time I thought was lacking in my financial advisor's approach. Perhaps in the near future, a sharpening session in managing one's retirement account would be the cat's meow. So, well, somehow I kind of answered this already, isn't it? Because this is a need or a goal for 2020 that the prior trader also presented to us, and certainly. So again, comment here what I would suggest, because here you use a term which is 401k. And 401k, of course, if you are in the States, you know very well what it is, because it's such an important thing in the life of a US resident. But outside of the US, probably if you are outside of the US, you are wondering what is a 401k, because this is a US thing, right? So my point is that 401ks is a retirement approach where within that retirement approach you have some tax advantages, while in cases, not always, you have certain contribution and help from employers to help build up your retirement plan, etc., etc. So long story short, 401k is retirement stuff. And the one thing I want to say here, so you can plan for it into your 2020 and you can acquire whatever relevant information is needed, is that investment for retirement are subject to very specific laws that tends to be different in different countries around the world. So for example, if you plan to do investments for retirement and you happen to be, let's say, in the UK, or you happen to be in Spain, or you happen to be in Singapore, you happen to be in Canada, or you happen to be in the US, all those different countries will have different products known differently. So instead of 401k, maybe in Singapore it's called a CPF, or maybe you are in the UK and you are using maybe an SIPP, right? So every place in the world has different terminology, but what's important, it really is not the terminology, is the fact that attached to that, those different approaches to retirement investment, you have laws that have big impacts when it comes to taxes and things like that. So I would like to, while we get ready ourselves as Tradictive, as your company here, as we get ready to support you properly into those long-term sessions for retirement that we'll put together into 2020, I think that would be very important is that you do your homework to find out more about tax implications to find out more about brokers and limitations from your brokers depending on the account type that you use. So do your homework to understand what are your choices, what are your possibilities. And by the way, you can find tons of free information on the internet about that, or you can just get a consultation with a professional advisor in that sense. And find out everything you need to know from the legal aspect of it. So when we talk about trading and technicalities and trading opportunities, you know what can be applied to your account depending on which country you live in and which product you chose to use. And let me give you an example of that. Recently, I had a conversation not too long ago, and maybe Bojan, you don't mind you don't mind me to say that was a conversation I had with you. And maybe you can even maybe add a little more to what I'm about to say on the chat box if you feel like it. Okay. So many people. Thank you so much, Bojan. Many people in the US use 401ks. It's a normal thing. Again, if you are not in the US, just bear with me on that. 401k is a retirement plan. Okay. In other countries, it may be called differently, but in the end, it's saving money for retirement. Okay. So now, many of those retirement plans, no matter the country, are normally linked to employers. So in the US, now specifically in the US, I will say, and I am not a professional advisor in the US, okay, but I will talk about it generically. So in the US specifically, you can take a 401k plan that is linked to an employer. And basically, there are ways to detach it from the employer so you can manage it yourself. Now, depending on how it's structured with your employers, it could be easier or not easy at all. Again, every one of those plans is a different story. There are some components of the framework related to 401k, which is standard, but other components that are totally customizable and totally different from company to company, from person to person. But basically, there are ways to take that 401k and convert it into someone else where you can basically manage it and have a greater level of control over what you can do. So, for example, in the US, a common practice, common among smart people and people that have been well educated in trading and so on, because when I say common, it doesn't mean many people do it. Actually, very few people do it, but it is doable. Is to take a 401k plan and convert it into what is known as self-directed IRA account. So an IRA account, it's in the US, is an account where basically the R stands for retirement. And basically what happens in an IRA account is that you have your taxes to be deferred. So basically all the profits you make now are not taxable, and only in the future when you take the money out of that account, then you will pay taxes then. Therefore, because you don't get tax penalties now, you have a much more powerful how do you call it? Oh my God, I just lost the word I want to use. Compounding effect. Here we go. I just said it. So you have a much more effective compounding effect from now until your retirement age, because you don't get tax penalties until you get to that future date and you take the money out. So let me make a couple of additional explanations to that, so you understand what I meant earlier when I said you need to do your homework to understand your possibilities. Okay. So let's say you were to be this person who has a 401k plan and wants to take the 401k and convert it into a self-directed IRA. So case number one will be that you get your 401k converted into a basic standard IRA account with a basic broker. And then, great, now you got tax advantages, which is tax deferred, and now you have access to a broker such as TradeStation, for example, and now you have freedom of operation and you can buy whatever stock you want. It's not going to be only mutual funds. You don't have to pay fees for the funds. So you are in a much better situation, okay? But talking about doing your homework, there are ways on how to set up your IRAs where not only you would be able to trade stocks or ETFs, you could actually trade futures and Forex and options, which are leverage assets with your retirement money. And some people will look at you like, okay, wait a minute, I don't want to do that because leverage adds risk. Well, it depends. As you all know, if you always use stops on your trades, the risk is limited to what you want no matter what. And if you trade options, the most you can lose is what you pay for the option. So your risk is limited no matter what. But now if you're right, you benefit from the leverage effect. So again, I personally am I am certainly embracing leverage. It doesn't mean all of you need to do the same I do when it comes to your trading and your investments, but certainly what I said, I guess, got some level of common sense, and I would think that many of you agree with what I just said. And so the point is that you could go ahead and trade on leverage with your retirement money, but only if you did it with certain brokers under certain circumstances. So you have to do your homework to find out which are the brokers that would allow you to trade futures and forex, for example, in your IRA account, because not all brokers in the States will allow to do that. Okay, so that's one example I want to give you when it comes to doing your homework to understand your options. Second example I want to give you, and this will be the last one, is taxes. So let's say you have $5 million, to pick a number, and you take all that money from a 401k account, and you move all that money into the IRA account. Well, then I agree, it would be very, very cool to have a scenario where your taxes are deferred, because now those $5 million would not pay taxes now. All the profits made with $5 million, which probably would be significant profits, would not pay taxes either, and you would only pay taxes in the future at whatever rate you take money out from that account. I would say makes sense. And even if you didn't know anything about taxes and you were to pick a standard IRA account, you would be fine if that was your case. But what if your case is a case where what you have now is $20,000, $50,000? Well, and let's say that you have 20 years to go to retirement, or 10 years to go to retirement, whatever. So what may happen there is that your $50,000 now may become, I don't know, half a million, 2 million before you retire. It depends on what you trade, how often. Forget about the amount I said. So now, what would you rather do? Pay taxes now and never pay taxes again? So you pay taxes on 20,000 and you never pay taxes again? Or would you rather pay no taxes on 20,000 but then pay taxes on 2 million? So in a case like that, probably you would prefer not to use a tax deferred model, but instead of use what in the US is called a Roth IRA account, which is a model where you pay taxes now, and then you will not pay taxes when you withdraw money out of your account. Now, there are limitations, there are maximums per year, there is ages, implications. So again, you need to do your homework to understand how it works, what's possible, etc., etc. And, this is kind of like what I would suggest to trader number 3. And again, that was a long explanation, but it's critical. So I would suggest to trader number 3, and if you are in the same position, to do a little bit of homework. You'll find a ton of free education on the internet, YouTube videos and stuff like that we'll talk about all of this. So spend some time, get a little informed, and then with that information, don't take it for granted, because again, we know what happens with free YouTube videos too, right? So but watch a few, so you start speaking the language and you get what's going on out there. And then with that information, then go talk to a professional. That would be my suggestion, so you can get customized advice while you kind of understand the framework. Is that making sense? And then you can also maximize those benefits. And these, together with the sessions that we'll do in 2020, well, hopefully that can make a significant impact. Okay, that would be the plan. Let me see, Maka. I have to step out to take a friend to the airport. We'll catch up the recording. Happy New Year, Maka. You're amazing, Maka. Thank you for that. Thank you for your work. Been tireless and amazingly generous with sharing your knowledge, tools, and insights. You are so kind to me, Maka. Thank you very much. I'm not sure if you left already, still here, but thank you so much. Ray, good morning, guys. Ray, how are you, my friend? Missing you. Dirk, pay now and never pay taxes again. That's a nice proposal, isn't it? I do 90% of my trading and my wife in a Roth account. Okay, smart one. Again, there are limitations. Each country is different. Not all countries got that model. So again, do your homework in that sense. Okay. Next trader. We go now for trader number 4. Let me see. Let me see. This was a long message, and I wanna make sense. I wanna make sure I copied the right portion of this email. Okay, that would be this. Sorry for that. So let's go for it. I believe this is the most relevant portion of the message that talks about the plan, and we can talk about this. Okay, again, today we're having a very simple conversation, but you may have heard me say before, there is a famous quote, right? Let me see if I can find it. I'm very bad with remembering quotes. There is only a few quotes I remember very, very well. So let me see. If you ask me to cut down a tree, I'll spend the first 4 hours sharpening the axe. Abraham Lincoln. Okay, so this is what we're doing today. Okay, we are sharpening the axe. So when we start doing stuff in 2020, we're organized. We know where we're going instead of just doing for the sake of doing. Okay. Okay. So ideally, what I would like to do is to use Trading Now to manage my portfolio, maybe using the weekly 144-minute timeframes, as my style is more longer term. For what I am thinking of opening another account with TradeStation, and continue using the daily 55-minute to continue doing more trades more often and get more practice. I am going again over the portfolio management and investment videos. I am sure if it would be possible for you to do some sessions on portfolio management to try to see how you do it. Perfect. So somehow there is a portion of your request and plan here which I commented on already, isn't it? We will be running more long-term stuff as well into 2020. Certainly I do get from your messages that I could have done a better job in that in 2019, and my commitment is there to do a better job on that in 2020. Okay, so we'll do that. But there is a comment here that I would like to address, and I have made a few notes for today's session for myself, and this will lead me into one of the subjects I would like to address for today as well, which is trading psychology. Okay, guys, here the trader, and I've seen you are with us today, isn't it? So you comment that you would use the daily 55 to do trades more often and get more practice, but then most of your money or the real trading you want to do it with other time frames. Okay, so you make a lot of sense from a purely operational point of view, but what you are missing, okay, and by the way, it's something that most of you have missed in your goals. Just like earlier I was talking about the deadline. Okay, in your case you are also missing the deadline. Okay, trader number 4. The other thing that you are missing is the impact of trading psychology. When you practice, not only you want to practice so you get comfortable with the rules and you gain some experience applying those rules. Certainly that is a goal. Certainly that's a goal, 100%. But between us, and please feel free to phrase it on the chat box. Okay, feel free to phrase it. Between us, is it that complicated to follow the flowchart that we have been going through together? I mean, I'm not saying it's crazy simple, and I'm not saying that there are no cases where you'll be like, oh my God, so what do I do now? Of course, these things will happen, but is it that crazy, complicated, complex, like driving you crazy? Or after 20 trades, after 50 trades, it's like, okay, that's it. I know what I'm supposed to do, right? So I'd love if you guys can comment on that, okay? Because in my mind, the later is true. And again, if I'm wrong, I need to know. So if you tell me, no, that's way too complicated, Jose, you need to help us, it's too complicated, so then I'll work on that. But in my mind, we got to a place where it's not so complicated. So when you talk about putting practice, I so appreciate the fact that you are diligent, you want to put the time and the effort, you are taking trading seriously. I get all of that, but what you're missing is that what you need to develop at this point, it's the experience from the point of view of the trading psychology. And if your bread and butter is going to be to trade the weekly and the 144-minute time frame with a specific position size, but then you practice more with a different collection of time frames with a different position size, then the experience you acquire with the other time frame from a psychological point of view would not have any relevance at all when it comes to trading the other time frame. So my proposal to you in that approach, and again, you make sense, okay, you make a lot of sense, okay, what you said is again, makes sense. But my approach out of my own experience and having not only as a trader but also as a coach in this case, would be that what you should do is to instead of opening another account with TradeStation, which you could certainly do that, but I would suggest that you open another demo account. Okay, you can do that with TradingView or TradeStation or anything else, and take more trades on that other account with the timeframes that you want them to be your bread and butter. Because it seems to me when I read your text that it's very, very, very clear that you are a single style trader. You want to trade one style. If you were to tell me, no, I want to be multiple style trader, I want to do investments and intraday trading and this and that, so then it's a different story. But if the only reason why you want to use daily 55 is just to build up practice, then I would say build up practice with the weekly 144. Okay, now you cannot take infinite amount of trades in the same account because you would have too much risk. So every trade that exceeds your portfolio risk, take that trade in another account, which could be a paper money account, and you practice using the same time frame. So the mental aspect of it will be much more aligned with your reality. And on top of that, to be honest, you put yourself in a situation that will be very impactful for you. Let me see what I mean. One of the most painful and rewarding experiences I had myself as a trader years ago was when I got to experience in my account. It hasn't happened a million times, but it happened a few times. And the first time it was so painful. So it happened a few times in my life as a trader that I got multiple positions running in my account, and all of them were moving against me. All of them, including the fact that some were long and some were short. And in the theory world, I was hedged. I've got to see at times in my trading life all positions working against me for a while. That's tough to swallow. Is that making sense? So, and you have to grow with it because that's going to happen. And again, and again, and again. And it's okay because there'll be times, by the way, you'll have all positions working your way. For whatever reason, probably Murphy's Law, that happens less often, but that will happen too. And, you have to develop experience in that too. So I would suggest that if you were to run a huge amount of trades in a paper money account of your style, you would put yourself in a position where this particular situation may happen more often. And therefore, you are training yourself in more practice, but also more psychological strength for when that happens with your other account, where you run a limited amount of trades with your real capital. So that would be my comment for you, and that would be my approach. Okay, but again, very nice to see your devotion to putting time and effort here. Okay, and let me see. Yeah, Muklis, trading questions, in this case, the gold trade XAU, will take care of that later in the session, if that's okay. Right now, I'm taking care of the homework, okay? Was you my first time here? Welcome, my friend. Where do I get the previous record to catch up? So if you don't mind, I'll get into that later on, since I am in the middle of the homework right now, okay? But I will certainly give you a little tour later on, okay? Ricky, Jose, why does the different timeframes practice not help with other timeframes practice, sir? Because you would only be focusing on the technical aspect of planning a trade, okay? And to be honest, that's the least important part of trading. Because, I mean, let's say I get a chart, okay? So let's say I get here into TradingView, and you can see I got in the bottom part, I got the 4-hour time frame. On the top, I got 21. And let's say I plan a trade with it. But now let's say I do the same thing, but I hide the time frames, right? I put a black box there so you don't see the 4-hour time frame, you don't see the 21. Well, the logistic, the operational steps I need to take a trade is the same no matter the time frame. So if you practice mode with other time frames, yes, it's good practice and you get good at the process, but you have no exposure whatsoever to the psychological aspect of the outcome of the trades that you really put in your account, right? So sure, it is that you need to develop practice on the method, on the logistics, on the operational steps. But as I was saying before, in my mind, and again, maybe I'm wrong, and feel free to tell me, Jose, that's not my case. You are wrong. It's fine. I'll take it. And I need to know that if that's the case, so I can help you better. But in my mind, you take 20, 30, 50 trades following the process, and I don't think you will have many more questions that are operational. From there, growing as a trader, it's all about the mindset. It's not about the method. It's about the mindset. Okay, we can still improve the method, we can still improve many things, but really what needs to be improved is the mindset. Okay, which is something very important I want to discuss with you later in the session today. Very, very important. Okay, because this is going to be the key in having you reach your goals in 2020. Okay, because of course the sessions we do together, the tools, everything is important. Like everything in life, everything has its own importance, but in the end, who clicks the button? Is it you or is it me? It's you, right? So you gotta evolve as a person, right? It's not only about how much RAM memory your computer got, and how fast AutoUFO processes the information. That's important, but in the end, who clicks the button, right? So we need to talk about that too, because it's key. Okay. So next one, trader number 5 here. Let me see. Okay, so I got the text. So copy and let's paste. Okay, here we go. So here is trader number 5. Okay, let me make this a little larger. So what do we have? Okay, so the plan for 2020: check charts once a day using monthly and weekly common time frame, using UFO strategy, just one target, at least 2 to 1, and then trailing stop. Ignore weekends and the news. All pairs use red screen and only take sensible near, aiming for 2R, 3 to 4% a month, about $35 per risk per trade. Aim for consistency in execution and results, then increase the size. So I have to say, I love what you said. Okay, it's realistic, it's reasonable. You're not shooting for 45% a day. You are taking it easy. $35 per trade. It's not a high risk, which no matter what your account size is, you are taking it easy. You are using real capital. I mean, I know you've been using paper money before, so you are now transitioning into real capital, but you take the size small because you want to give yourself the chance to see how it goes, because psychology will hit, and you don't know how you will react, and therefore you're giving yourself time to develop psychological maturity when it comes to being a mature trader. Okay, so I love what you said. Now, having said all of this, I am looking to see here a deadline. Okay, a deadline, and I'm pretty sure that you have that, because I know you are a very detail oriented person, but it's not written, so I have to say it. A deadline for you to review those trades, see if your results are being met, do corrections if needed, etc., etc. Okay, because even though you talk about the amount of return per month you would like to have, and the fact that you will look at the market once a day, you don't state the amount of trades, you don't state when is it that you're going to consider that you're doing well or not. So you will want to add a little more detail, just to push yourself to meet deadlines and keep yourself accountable. As I said before, future, same story. So it seems that you are going to be doing different styles of trading. Forex more swing, futures more intraday, but only Thursday and Friday, which I guess has to do with your calendar, with your schedule. Sorry for that. So all of these makes sense. Take 20 trades and see how it goes. Okay, so here somehow you are setting a deadline based on number of trades, but as I commented earlier to Mark, again, it would be better that you also put a date apart from putting a number of trades only. Okay, and then learn, do options. So you are putting yourself in an experimental mode for options. So get to learn, get to practice, get to see, get aha moments. I get it, but again, it'd be good that, as you did here, you set a date, which is to do a first sim options trade in January. Okay, so I'm glad to see that, because you need to unlock that first step. Okay, so that's good. Okay, I like what you said there, and I don't see any reason why this could not make sense. You just need to add a little more detail, especially when it comes to deadlines. Okay, now one thing I would like to comment, which is another one of my notes I wanted to comment for today, is about correlations. Okay, we all understand it's important to be diversified, but if you check charts once a day using monthly and weekly timeframes, so what's going to happen is that there will be days where you will have no trades, and then you have no risk. but there will also be days where you may have, 5 trades happening at the same time, and some of those will be correlated. So it's important because I did have I did have identified that some of you have been having some level of struggle in your trading, and when reading your comments, looking at your trade examples, etc., I have identified that many cases, like many cases, it's not only a few, it's many, has been because you have been trading correlated, especially in forex, correlated pairs. Also, at times where news have been quite intense, for example, over Brexit news or things like that. And we need, and maybe I need to do a better job at that. We did have a session, sharpening session on correlations, which is recorded on the YouTube channel. But maybe what I should do as well is work a little more precisely with correlations during the session. So one more thing I plan to do in 2020, apart from the other things I said, which is to work on the retirement sessions and so on, I want to add a little more when it comes to tools for correlations. Because I have identified that as a source of issues for some of you, where you look at the charts, you want to take a trade, you are given a trade, you take it, but then 5 minutes later, another alert rings and you go take the other trade. You didn't notice they were correlated. And it's either you get 2 profits or you get two stop outs. And if you get 2 stop outs and then you do it again and you get another stop out, next thing you know, you end up stop trading for the week and lose your confidence. Okay. One of you in your emails were talking about the C word, which I talk about all the time, and some of you are doing a very good job from a purely operational point of view, but then you are not developing confidence yet. And guess what? It's because the other C word, which in this case is correlation, you are taking too many trades that are correlated. You are not watching for that, and I feel I should assist you better on how to watch for that. Okay, so I would suggest for you as well to add that in your plan. Okay. Let's go for number 6. You know what? Let me give you a break, guys. Okay, I'm gonna give you a 10-minute break, and we'll come back in 10 minutes. To continue with the session. Okay, so 10-minute break, everyone. Let's go for it. Hey everyone, this is Jose. We are about to start again. It'd be good if you could confirm that you hear my sound, so we are ready to start when we get to the end of the timer. Thank you so much. Very good. Perfect. Okay, so I believe we are ready to restart. Very good. It's all good. All perfect. Nice. I've seen some comments on the chat box while we were in the break. Paul, as well as Ray. So we're gonna take care of all of these, okay? But your questions are more on the technical side, and I'm still doing the homework, which is the plan for 2020. So I'll finish that. I have a few more cases to discuss with you guys, and then we'll get into the technicals, and therefore I will begin answering all those questions. Okay? Cool. Okay, so next one. Next one. Let me see. Okay. Mm-mm. So I'm just looking at the right portion for me to copy and paste. Mm, yeah. Okay. Okay. Good. I got it. Sorry for that. But I just got the data I wanted to copy, which is going to be the relevant one. Here we go. So here is the text that I got. And the trader here says, so this would be trader number 6, okay, how I think about my progress. I try to be intraday trader, especially 4-hour time frame, but I also tried the 1-day time frame swing trader. I am still using demo account. I do logging trades since the 28th of October. I send attachment, sorry for the mess trading log, which I've been reviewing, by the way, but I still can't get the C word, confidence, because my last result still minus. I believe I understand trade with UFO trading methodology like 85%. Looking forward for your advice. What to expect in 2020. I want to get the C word, confidence, this year. I also want to open a real account with a small amount at first, so that I can experience the psychology with real account. With real account, if it's okay to have a target, so my target is around 5 hour per month or 60 hour per year. Got it. Perfect. So let's talk about this because this is a very relevant email. And I'm sure somehow in my mind, at least if I think of myself, it represents quite well the journey of learning how to trade, because this is kind of a pretty normal, I would say, situation in which a trader finds himself or herself into when you start practicing the methodology. You do understand the methodology, but you start not getting the results you want, and next thing you know, you lose confidence, and now you don't know what to do, and etc. etc. So I would like to talk about this because that's quite critical. Okay. So first of all, um, the trader says I try to be an intraday trader. Okay. So again, maybe it's just a language thing, and English is not my first language, but it kind of got me thinking when I hear or read I tried to be an intraday trader. So I don't know if the trader number 6 is thinking of giving up because the results are not adequate, or he tried to be an intraday trader, and what he means by that is that that was not really compatible with the schedule, with the time availability, and he really tried hard to find trades that are intraday, even though it was not really convenient, based on other responsibilities in life, such as a job, for example. So in 2020, one of the things that you should do, this applies to everybody, and certainly for to this particular plan, what you certainly should do is to find an area where you can work in trading in a way where you have a good level of peace of mind. So you don't need to rush into planning your trades. You don't need to be concerned about anything you are in a quiet place, there is nothing disturbing your thinking when you are putting together your trades, etc., etc. So it's important that you find an environment and a time schedule like that, because if not, even though you are running the methodology and you feel that 85% you understand the methodology, the fact is that in the back of our mind many things are happening and you may rush into a trade. You may not have a good UFO, it may not be lining up perfectly with the EMA, but you still take the trade because you have limited time, whatever. And many of those things happen at a subconscious level, or maybe it's a conscious level, but unconsciously you find reasons to justify why you did what you did, while what you did does not meet the rules. So um, again, maybe I'm overthinking, but I've seen it before, so that's why I'm making this point. Make sure you are the style of trader that makes sense for you to be. Okay, if you have time to do intraday trading, do intraday. If you have time but it's not your personality, don't do it. If it's your personality but you don't have time, then don't do it. Find another style. So find somehow a way to trade that you are happy with from a level of comfort point of view. Sure, it is that in life, to improve you have to step outside your comfort zone, but that's when you're learning. When you're trading, you should be within certain levels of comfort that don't impact negatively your thinking process when you apply the methodology. Okay, so find that sweet spot. That's something that should be part of how you trade. That's one thing. Second, um, you have been logging, which is very, very good and super important. Okay, and I've been looking at your log, and what I've been, I will not share the log because that I feel it's just more personal. But what I have seen in the log is that even though there was a lot of information there, there was no information looking for improvements. Like, for example, okay, I got stopped out in this trade. Did I do something wrong? Or I made 3-1 in this trade. Could I have made 5-1? So there was none of that. And I believe this is kind of like the only reason to do a log. Because in the end, yes, there is an accountability reason, etc. But really, when you are in learning stages and you are developing the confidence, the key is that you go back and review what you log. You don't just want to log just for the sake of logging. So I'm not sure how deep you went into this. Maybe you didn't add that information to make it simpler for me to read your email, but that's a very important part of developing your C confidence. Because if you were to look at your results and you say, okay, wait a minute, my net result is negative, but I should not have taken this trade. I should not have taken this trade. If I get those trades out of the equation, I am actually profitable. Then next thing you know, that's going to build up your confidence because you understand that what happens is that you made a mistake, which is human. Okay, but if you never realize you made it, you'll make it again. Where if you realize you made it, you will never make it again because now you know that's a mistake. Okay, so uh, building confidence, which is one of your goals for 2020, should imply that in your planning you should add time to review your logs. Okay. Uh, by the way, talking about your log, when looking at your results, I did see a little bit of the problem with the correlated trades. Okay, so my first impression when looking at your log is that if you had not had those correlated trades running in parallel, you would be okay. So again, it's important for you to review so you know what to change, if any. Okay. Cool. And last comment for you. And again, remember the comments in this case are for trader number 6, but many of those things apply to all of you, isn't it? So probably everybody. So keep that in mind. Is when you talk about the trading psychology and the impact of trading psychology when it comes to applying it to paper money or real money. So in one hand, I am very, very happy to see that you have a plan where you plan to transition from paper money to real money whenever you see results. And from there, the moment you transition to real money, then you will have a much intense psychological impact, and there is more to learn there. So I'm very happy to see that you understand that. At the same time, we gotta find a balance there. Okay, and what I mean by that is that if you are too much of a perfectionist, and I'm not sure if that's your case, but let's say that was your case, and you are waiting to see exactly the results you want for you to begin trading live, the typical outcome of that, it's often disappointment, because it's like, okay, I'm making my 5% a month now, switch to live, okay, things are different, especially from the psychological aspect, and next thing you know, now you are underwater or making 1%, and that's very disappointing. So knowing that this is likely going to happen, my suggestion would be that the moment you got results that are more or less okay, okay, and we don't even need to measure what more or less okay is, because it's more about a feel of level of comfort more than monetary results. The moment you understand that, switch to live. Use a very small account. Use the tiniest size you can. I know you trade forex, so you can trade micro lots. Use the smallest size you can, one micro lot per trade. If you lose, you're gonna lose $2, so we can certainly survive that, isn't it? But now is real money, and it makes a difference. So try to get to that point as soon as possible, because that way you are not building confidence to play video games. You are building confidence to trade. Sure, it is that you cannot have confidence to trade unless you are confident on the methodology. And right now you are not, because your results don't justify it, which I get it. Okay, as I said before, I myself went through a similar experience. So I totally understand how you feel. But at the same time, I do feel a little bit. Again, it resonates very well with me because it was what I did myself. So I do feel a little bit that your approach is, in one hand, detail, which is good, but in the other hand, too idealistic or too perfectionist, or both, and you may end up spending, let's say, 6 months to get to the results you want, and then when you switch live, then your results will not be exactly how you want anymore, and now it's like you're going to be September, October, November next year, and it's like, oh, I'm still not reaching my goals, right? So I would like to help you to fasten the process a little bit by, having do what you do, review your logs, learn from the mistakes. Feel free to connect with us for sure, and I'll be more than glad to help you. But then the moment you start getting to a certain level of comfort, putting on the side monetary results, meeting your goals or not, go live. So that way now you are growing in parallel your skill, your results, but also your confidence for the real thing instead of the confidence for the video game. Okay, very good. Next one, guys. I got one more of the homeworks, and from there we will go into technical questions. Okay. Mm, oh, actually, to be honest, I already answered that question too, because trader number 7 actually was an additional question to trader number 4, I believe it was. So I already answered that earlier, as I remembered. So yeah, so that's done. Okay, good. So let me check the chat box here on the phone to make sure I'm not missing anything, and we're gonna start getting into technicalities. I know some of you were waiting for that. Paul, you have a collection of questions there that we need to address in much detail. Very good questions, but I want to make sure I'm not missing anything from anyone. So okay, so why you, Jose, regarding auto climate, they mentioned current candlestick. I thought it would be for instant execution. Okay, so I'll look at that in a minute. Paul, Dirk, and on the same token, there is a clubhouse session every Saturday morning at 11 a.m. with Tom Blozer. Session is about the zero. Okay, so you are doing trades on the S&P index. Got it. Okay, got it. Okay, got it. Perfect. I went to the end of the chat box, so I am aware of all the questions. Okay, so just to follow a logical sequence on my end, so I don't skip anything. So I'll start with some of the questions that were sent to us via email, and I'm just gonna put them on the screen. And these, I hope, Paul, you don't mind. I say those are your questions, so they are kind of a little bit of a repeat of what you have on the chat box. So I'll just put on the screen the text from your email, so that way I can just answer from what you send us, and then I'll look at the chat box to make sure that I didn't miss anything. Okay. So let's begin. Let's begin. Here we go. So first question from Paul was, what time frame would be appropriate as main or primary time frame? You are using 30-minute, dropping to 15, also going up to the 60-minute time frame. And you're asking, before market opens, what time frame would you suggest to begin analysis? And all of this is knowing that you are a credit trader. So what you love to do is to sell options, okay, and hopefully collect premium that is nice, and then hopefully have the market never reach your strike price, so that way those options expire and you keep the premium, okay. So in that context, what are the ideal timeframes to be used? And I got multiple answers for you in that sense. And the first thing I would like to do is to bring a screenshot to the screen. So you get to see this because, Paul, I am not fully sure if you have been part of our sessions since the very beginning. Okay, so I want to show you a document that you may have seen or you may have not. So in trading, okay, every time that we have been doing in the sessions, we have been looking at 3 time frames as a maximum. We call those time frames the common time frame. We call those time frames the edge time frames, and we call those time frames the reactive time frames. So in other words, as a maximum, every time we plan on a trade, we use a maximum of 3 time frames. This, by the way, is to be directional. To be non-directional, I lower 3 time frames, and I've been using only one. Okay, but my point is that during the sessions that we have conducted, I have shared with the community 3 specific timeframes: common, edge, and reactive timeframes, which, as you can see, depend on the markets that you trade. For example, S&P futures uses the common minute timeframe 15 combined with the 2-minute timeframe edge. And then, apart from the edge timeframe, you can also use share bars and tick charts if you choose to do that, which is optional, which is the 2584 share bars and 1597 tick charts. Okay, and then optionally as well, reactive timeframes, which are not minutes, they are shares and ticks only. Okay, so this is again for directional trades. When I use these type of setups for directional trades, I would do it here. Okay, so for example, if you want to trade the S&P, okay, so here's the S&P. I'm opening the workspace. So what do we have? So here on the bottom, I got ES 15-minute time frame. That's the edge time frame. Sorry, the common time frame. And then on the top, I got the 2 minutes on the left, the 2584 share bar, and on the right, the 1587 tick bar. And those are my edge time frames, the 3 on the top. And then here, the 2 on the bottom right, 610 share bar, 377 tick bar. Those are the reactive timeframes, which are optional when traders want additional evidence and confirmation that a trade is to be taken directionally speaking, and they trigger the entry manually by using the reactive timeframes. Okay, so 3 timeframes. Long story short, the common time frame to check the market conditions, we call it climate. We use auto climate for that. On the top, we have the edge timeframes to define entries and exits with the AutoUFOs. And then, as an additional source of confirmation or evidence, in case you are more conservative and you want to act on the trades manually with that extra evidence, then we use the reactive timeframes here on the bottom right. And that's what we do for day trading, intraday trading. This is what we do for active trading. If you want to be less active, instead of 15 and 2 minutes, you use 60 and 8. If you want to be less active, we use 240 and 21. Okay, so in the sessions, we've been using very, very specific time frames, and I have been giving very, very specific time frames to the group, to the community, on which time frames to use for which markets. You can see S&P on the right, Nasdaq, Dow Jones futures, the Russell futures, the 10-year note, 5-year note, 30-year bond, crude oil, gold, natural gas, copper, silver, etc. Okay. Now, for your case, first, you are not trading a futures contract. You are trading an index. Okay, so you are trading the S&P 500, okay, which in TradeStation shows as $SPX.X. Okay, $SPX.X. So now the difference between this and other products is that the SPX.X is an index. it is optionable, and your bread and butter, Paul, based on what you said, is to sell options on the index, but at the same time, it's not tradable by itself. Therefore, there is no volume information, etc. And therefore, diving deep into volume timeframes, tick timeframes, and so on, I would just say it's probably a little bit of a waste of time. So in order to do non-directional trades with products such as the S&P, I'm talking about all of these just to have a little bit of a summary of things that many of you guys know, but just to make sure we are all on the same page. So for you to do non-directional trades, credit trades with the S&P, basically you have two choices. Choice number one, if you were to, instead of chart, the SPX.X, okay, or as Dirk was suggesting, the SPXW, right? If instead of trading the index, if instead of charting the index, you were to chart futures, okay, and then take trades on the index, but your timing analysis, your selection of strikes to identify which options you sell was done using the futures markets, then you could certainly use this table. Okay, and this table would be a valid table. And now, depending on the duration of your trades, so it's not the same if you sell options that expire today, or options that will expire next Monday, Wednesday, Friday, next month, depending on your time horizon, depending on the expiration date, then you will want to select a time frame that makes more sense. But if you want to keep it simpler, and then you want to, again, because if you look at the price of the index, 3,240, that's the index. If you look at the S&P, okay, the S&P is currently trading at 300 to 236, which is more or less what the index is. Okay, so the divergence, the difference between the index and futures is very, very similar. So you can certainly do what I'm doing now, which is to chart futures, look at where the UFOs are, okay? Look at where the UFOs are, then switch back to where the S&P is, okay? Okay, you can see those three UFOs were created. You can look at the date, okay? Instead of looking at it horizontally, you can look at it vertically. So that is what? 11:20 on the 24th of December. So when I switch back to the S&P, I forgot the dollar, sorry for that. SPX. So now you look for 24 of December, 24th of December, right there, 11:20. Okay, so that would be the little thing, and therefore that bottom wick of that candle, which is 32.20, you would want to use that reference price to sell options, right? 32.20, right? Where if you go back to futures, it is not 32.20, okay, it's 32.22.5, okay, but then you would kind of offset this way the difference between futures and the index. Now you will know that is the price point, and therefore I'm going to sell options below 32.20. Okay, so option number one, it's to use futures with the time frames that you see on the table I gave you, and then sell options. And by the way, you can see that very easily. Okay, if I apply UFOs to the S&P, I got 60.92. If I apply the UFOs to the SPX.X, I got 40.69. And you may be like, oh, wait a minute, what's wrong with the UFOs? There's nothing wrong with the UFOs. Same happens if you look at SPY, which is an ETF. You're going to get 40 something, 43. And you're going to be like, what's wrong with the SPY? What's wrong with the UFO? Nothing's wrong with the UFO. Nothing's wrong with the SPY. What's happening is that while the SPY or the index chart is not updating because the US market happens to be closed, the futures markets are not closed, and orders are being filled on the futures markets 23 hours per day, to be precise. And therefore, when the US market reopens, many of those UFOs may not work well if you use the chart SPX.X, and therefore you get a UFO performance stat, which is not too good looking compared to the UFO performance stat that you get with the S&P, where you have the full visibility of the 23 hours of trading. So that's why I prefer to plan my trade using a market where I got full visibility of the whole amount of time available where that market is being traded, instead of only have kind of like a third of the trading hour of the day, because the S&P index or SPY basically updates, if I'm not mistaken, 6.5 hours a day, where 23 hours is kind of like 3 times more. Okay, so that would be my first suggestion. Use the time frames of the table uh, on futures, and then find the equivalency with the chart of the SPX.X, and then sell your spreads. Okay, and you'll be in a better position from a probability standpoint. That's option number one. Option number two, if you tell me, okay, but I want to keep it simple, I don't have the data feed for futures, I don't know, whatever. Let's say you want to stick with S&P. So then, sorry, with the S&P index, not the futures. So I would say it's okay. It's not a crazy thing to be done. A UFO is still a UFO. But at the same time, then what I would like to suggest is that you really spend time calibrating AutoUFOs and also playing with timeframes to see which timeframe gives you the best performance. And that's the timeframe you want to use. Okay, that's the timeframe you want to use. So for example, if I use 55 minutes, I get 40.69. If I use 15 minutes, I get 48. So guess what? I would rather use the 15 minutes instead of the 55. Common knowledge or common market theory would suggest that the higher the time frame, the more relevant. And in certain aspects of trading is true. For example, a trend that develops in a larger time frame is likely to last more than a trend that develops in a lower time frame. So in certain aspects of trading, it's true that larger time frames are relevant. But when it comes to unfilled orders, you don't know what's more relevant unless you look at this figure. And therefore, just play with the time frames and with the calibration, okay, until you find values which are the best you can find, and that would be your combination. The tricky part of this is that this will change through times, because liquidity and buying intention and selling intention will change through time. So for example, let's say the fundamentals in the market get very problematic. You may start seeing that many of the green UFOs don't work well, and most of the red UFOs do work well. You may say, okay, this has to do with the trend. Great. If you have some trend analysis part of your methodology, which I don't know, that could certainly help you. But my point is that there will be times, I can just show you this even more easily. So if I look at, 1 month of trading in the 15-minute time frame. So if I look at November 29, 2019 to December 29, 2019, so we got 48% stats, right? But what if I look at November to October? Okay, so now you got 49. So in other words, it's a little difference in this case, but it seems that 1 month ago, the UFOs were reacting better. Why is that? I don't know. And to be honest, we will not know. I mean, I would guess, and probably I'm right, but I don't know for sure, which is, the holiday season in December implies less trading is less volume is less orders is less unfilled orders. So maybe that's why November was giving us better results than December. I don't know. But the fact is that if you're going to pick the time frame yourself to work on the index that you plan to use, then my recommendation would be that in a regular basis, you fine tune your tool, looking for the best results you can find, and there would no be a magic formula or anything like that, but you become more adaptable to the market if you keep, let's say, once a week rerunning your statistics. Well, you may end up saying, you know what, last week I was doing my credit spreads with a 10-minute time frame. This week, the best time for me to use is going to be the 50. Next week, the best time frame for me to use is going to be the 30. Next week, the best time frame for me to use is going to be the 5 minutes. And you just keep adapting week after week to whatever the markets are suggesting is best. And that way you would put yourself in the best position as possible, at least from a probability standpoint. Okay, that is if you're not going to use futures, because I told you that would be my recommendation. Okay. Anyway, so got it. Oh, most of the times is 0 days to expiration. Got it. Yeah. Okay. So I get you. I think that that was one question that you had. If I didn't answer, if there is something pending for me to answer, please go ahead and let me know concerning that question. Question number 2 is, As the day progresses, I find opportunities to zero in on smaller time frames. Drop down to what? Okay, well, in this case, Paul, I'm not sure if you have been part of the sessions for a long time or less time. I'm not fully sure about that, but know that if you get, and by the way, this is, I'm gonna kind of answer two questions in one shot. Earlier, I believe it was Ricky, I'm not fully sure, but I think it was Ricky, you were talking about where to find the recordings of the prior sessions so you can get up to speed with certain things. So this is our YouTube channel. All of you know that. So if I scroll down into the get together sessions here, we got sharpening, short-term, long-term. You probably know that, but just in case you don't, click here in the bottom part where it says view full playlist. If I click view full playlist, this opens a list of all the sharpening sessions we have done since the very beginning. And I want to point at one very important session, which is called the trading flow chart. Okay, together with three key sessions. Was it 3 or 4? Let me see. It was 4. Intraday 1, intraday 2, intraday 3, and intraday 4, done in April earlier this year. Okay, so if you were to watch those sessions, and then you can feel free to send us an email, and we will email you back with this document here that I'm loading, which is the flow chart. Okay, the flow chart and the time frames that I showed earlier. Those two things together basically is the process on how we find intraday trade as the day progresses. So I could see, as a very normal situation, a trader like you, Paul, to begin the day or before the market opens, during the pre-market session, you are doing your analysis, you are finding your trades, the market opens, you sell your credit spreads, and while you are waiting for the day to pass because you do DTE 0, then you go ahead and you start applying this flow chart using intraday time frames in a collection of markets, could be futures or forex. You could certainly do that. How do we do it in the session? Well, we use TradeStation. To save time, we use this particular scanner where, with the golden color, the scanner highlights which are the opportunities that are ready to be taken. And when it flashes golden and we have the word sensible, then we go check the chart and apply the method that is described in the flow chart and in the sharpening sessions I just pointed at. And then you can certainly mimic and replicate what we do. And I would say this process should help you, like it's helping many. And probably this is a good routine for you as a trader to take care of your credit spreads while you find additional intraday opportunities. Okay. Question number 3, what calibration level would you suggest? And this I'm going to answer in 2 ways. So first, I would like to ask you to, when you have time, go ahead and find a video here called Sharpening Calibration, done in May 2019. Because here it will explain to you everything you need to know about calibration, where some of the things that are explained in that video are quite subtle and certainly important for you to understand. So I don't have time to do a 2-hour session on that because it's already done and recorded, but the long story short, so you understand why this is important, is that calibration impacts not only that figure with the probability, for sure, calibration impacts that, but most importantly, calibration impacts your trading style. So let me go ahead and load the S&P, for example, and go back to today's date. So we have real-time data on the chart. Here we go. So if I look at this particular chart of the S&P, we got a performance stat of 73%. That may make you happy, okay? But notice how, if I change the value from my current value, okay, the one I use, okay, you were asking about what is my favorite. So I'll share with you my favorite. Is not a recommendation at all because you need to do your homework, but my favorite is 0.618. I use the golden ratio, the Fibonacci golden ratio, as my calibration, 0.618. This is also explained in that video, right? But notice how, let's say, for example, I do 0.4, that number 73 becomes 76. Okay, notice if I change my calibration setting from 0.4 to 0.8, my performance becomes 56. So what's the best number? Well, the best number is not necessarily the greatest performance stat. In one hand, you would say, of course, that's the best, but in the other hand, it's not at all. Because for you to get a greater number, typically you achieve that with a lesser calibration setting. And what happens with a lesser calibration setting is that you get more trading opportunities. Sorry, I said that backwards. Sorry for that. With a lesser calibration number, you normally get less opportunities. Oh my God, let me say that again. I'm really sorry. I'm trying to say multiple things at the same time. Let me say that again. Reset. Let me say that right. With a lesser calibration setting, you get worse performance in most cases, but you get more UFOs. In other words, you get more tradable opportunities, but you get stopped out more often. With a higher calibration setting, you typically get higher probability stats, but you also get less UFOs. In other words, you get better results, but you trade less often. So depending on your personality, has a lot to do with your psychology. How do you feel when you get stopped out? Can you deal with it easily, or you have a tough time with it? So depending on all those things, it's important for you to play around with the calibration to find something you like, something that makes you comfortable, and then you don't need to calibrate again. Okay, the case I told you earlier with the S&P, it's because it's a market where you would have missing data because you only got 6.5 hours a day of trading out of a 23-day. 23-hour day. So then you can tweak the stats to try to find what's best. In this case, especially if you're going to apply this to stocks or futures or forex, and you have so many markets, so then it's really difficult to it's basically it's not practical to really like every week to recalibrate everything. That would be crazy. So the idea is think of calibration as a definition of your trading style. So in my trading style, I don't like a number too low. I don't like a number too high. So I come up with being comfortable with around 0.6. And because I like fibs, so I just came up with 61.8, which is the golden ratio. Okay. And this works for me and it may work for you. But again, we all have a different psychology. Some of you may want to be more active, less active, and therefore you will need to do your own little practice and adjustment to know what you have in your hand. And then you can just leave it like that, for your trades. So that's the short story, okay? But make sure you watch that video, okay? Good, perfect. Okay, so Paul, these are your questions from the email, if I'm not mistaken. I believe I've seen other questions from you here. So let me take those questions. I love it, guys. You guys are doing a lot of interaction between you guys. I love it, love it, love it. When I see a lot of teamwork. Yeah, Paul, you had a very good question here earlier. You said unfilled orders should be the same regardless of the time frame. Unfilled is unfilled. So why do we see different UFOs? What is the relationship between time frame and orders? That's a fantastic question. And by the way, I believe when you watch the video on calibration, you will also get some insights about that same question too. But again, I want to give you an answer today. So think about it. In one hand, what you say is perfectly correct. Unfilled orders is unfilled orders. And if the app was to plot everything, no matter the time frame, okay, you would just get UFOs, and no matter when you switch time frame, you will get the same UFOs in the same place. So your thinking is it's perfectly correct and it makes a lot of sense. Okay, but there are two problems. Problem number one: if we were to have TradeStation to analyze all market data for all time frames and plot it in one chart, that would require and demand from TradeStation or any platform, for instance, a tremendous, massive, amazing amount of processing power if we were to run all time frames. And that would not be practical unless you have monster computers, and you would not be able to run UFOs on your phone when you use TradingView, and so it would not be practical. That's one problem. Number one. Problem number two is that it's a problem or a consequence of using different timeframes. I mean, let me ask you, why would you use different timeframes normally? Where normally you use different timeframes to dictate your trading style. So forget about UFOs. Let's say you have never been exposed to UFOs, and let's say you use technical analysis to do your trades. Well, if you plan to do a swing trade, you will probably not look at the 1 minute time frame. You will probably look at the daily, the 60, the 4 hour time frames, things like that. Where if you were to do intraday time frame, you will not look at the monthly time frame. Who cares about the monthly time frame if you do intraday trading, right? So in other words, the time frames that we use, apart from giving us market data, they are also dictating the style of trading you perform. Therefore, the way the app has been developed and fine-tuned is that the app ends up plotting different UFOs per time frame, because while the app is looking at a lot of market data and looking at time frames and all sorts of things at the same time, it's not looking at everything because, as I said, it would be too much processing power, but at the same time, it's looking at many things. What the app has built in is kind of like a filtering process where if the app identifies unfilled orders in a time frame, but the expected amount of unfilled orders is not significant enough to create a trade that would become lasting enough given that time frame, then AutoUFOs basically don't plot that UFO on the screen. In other words, sure it is that you got many unfilled orders in the market, but the size of the stacks of those unfilled orders is not always the same. So when you are using a larger time frame and the app does identify unfilled orders, but is only a small stack of orders, then the app chooses to not to plot it, because a small stack of orders may create a little bounce, a little noise in the market, but a little stack of unfilled orders is not likely to launch and support a long-lasting move, right? So in other words, in the higher time frames, the app will not plot UFOs that could have been identified in smaller time frames because they are not relevant for the higher time frame, and vice versa. Okay, and that's why it is the way it is. So your thinking is correct, and I love what you said. But at the same time, from a practical point of view, for a trader, and also because AutoUFO is compatible with other techniques, isn't it? You can use AutoUFOs by itself, but you can also use it combined with Fibonacci, with trend analysis, with Ichimoku Cloud. You can use it combined with Bollinger Bands, and there are traders of all sorts. We have app users that use AutoUFOs in so many different contexts. So one thing is the very specific methodology I support you in when we do the sessions together, but there are so many other app users that are using the apps in other contexts, and therefore the app chooses to plot the UFOs based on the criteria I just explained. So hopefully this clarifies. Very good. So anyway, so let's continue. So I'm going back all the way now. I believe, Paul, I reached the end of your list of questions. If it's not the case, I would like to ask you to type additional questions you may have that I may have missed by mistake. But now I'm back to the very beginning of the chat box, and I'm looking at all the questions, because at the beginning of the session we got technical questions and I want to answer everything. Okay. So Ricky, at the beginning, Ricky was asking about how to get more experience trading options. Okay, so my suggestion, if you want to get more experience trading options, okay, because it seems that you have just taken your first options class, so I am gonna start. I'm gonna assume that you understand well options. You understand well option stuff. If you are still lacking understanding, you can use our YouTube channel. There is plenty of options videos there. You can just keep watching and enhance your knowledge. But I'm gonna assume that your knowledge is already where it needs to be. So how do you develop yourself in the world of options? So what I would suggest is that for a month or so, you focus on directional trades, and for the next month, you focus on non-directional trades too. So give yourself like a month where you practice only directional trades, and the next month you add non-directional trades to your directional trades. I would suggest that you do it this way. So you go from a simplistic approach to trading to a more advanced or a more complex approach to trading options, okay? And for sure, I would suggest that for those initial 2 to 3 months, you use paper money, because you will realize options got life on their own, big time. and you would not want to find yourself trading live when it's too soon. You certainly want to start trading live soon enough, but with options especially, there are so many things you need to realize. You're going to have so many aha moments that you certainly want to give yourself the chance to trade in a demo account first and then go live. Okay, so that would be my suggestion for you, Ricky, and hopefully this is what you needed from me. Muklis, you were asking about analyzing the trend with additional indicators as the 200 EMA, 50 EMA, and the answer is absolutely yes. Absolutely yes. You can do that and many more things. Okay, many more things. Guys, something you need to understand, in case you have not yet, is that trading is not about finding a magic holy grail or a magic crystal ball. That's not trading. I mean, it would be really nice to have, but we all know it does not exist. So anything that moves you in the direction of trying to have this amazing, unique process on how to analyze the trend or analyze the entries or the exits or whatever, that is so good, that is the only way to do it. Any way that in trading feels like that's the only way to do it, it's wrong by definition. Because there is no sure thing in trading because we don't know the future. Therefore, there are many ways on how to stack odds in our favor to be closer to what probability suggests the future will be. And it certainly is nice to improve those odds and improve our methods to get as close to possible to a high probability scenario. But at the same time, you don't want to fall into, so what is the best way to look at the trend? Or what is the unique way to look at the trend? Or what is the real way to look at the trend? This kind of approach to trading has a big problem in it, which is you're going to be very disappointed because you are looking for something expecting it to not to fail. And the fact is that trading is about probabilities. It's not about certainty. It's about managing uncertainty. Okay, so your psychology needs to be in the right place. Your mindset needs to be in the right place. You should be ready to use methodologies that sometimes work, sometimes don't. You just want to have probability on your end, so they work more often than not. And they don't need to be the best as long as they give you odds. Is a good methodology as long as it gives you odds. So looking at the trend using the 200 EMA gives you odds. Go for it. Are there better ways? Probably. Sometimes they work better, sometimes they work worse. So which one is the best way for you? The best way for you is a way that you have learned, that you have practiced, that you feel comfortable with, that gives you odds. And that's what you do. And you do it mechanically, creating consistent action, and that gives you consistent results. It doesn't need to be the best. Is that making sense? So the answer to your question earlier is that it's absolutely valid for you to look at the trend instead of using AutoUFO like I do myself here, right? So if you look at my chart, okay, what do I have here? I have AutoUFO. Blue means you should be a buyer. Red means you should be a seller. You have the thick dots. You have the thin dots. You have so many things, isn't it? Great. What else do you have? You can do so many things. Instead of AutoUFOs, maybe you actually do it manually. I mean, my thoughts about doing things manually is so subjective. You depend on your luck now. But maybe you do that. You draw a trend line and you have an uptrend. And now you call it an uptrend. Why? Because you have a trend line. Okay, or maybe you run Bollinger Bands, or you run 3 moving averages, and only when the 3 of them point in the same direction, then you call it an uptrend. Okay, so everything you do. Okay, so if I load 3 moving averages, okay, and let me go ahead. I don't know. I'm just gonna make these the 20, the 50, and the 200 that you were mentioning, right? So maybe now, I'm gonna look at these, and only when the 3 of them are moving up, then I will call this an uptrend. Okay? Could you do that? Yes, of course you can. Absolutely you can. What is best? No idea. And it changes through time. So what matters is that it gives you odds, and you feel comfortable with it. And as long as this is the case, that's what you do, and that's good for you. And that's it. Okay, so make sure you don't overthink too much about that, because it's the world is full of frustrated traders that never went anywhere. Very, very, very smart people. I'm saying that with 100% full respect and recognition. Very smart, very devoted, very committed, and spend their whole life looking for the holy grail end up giving up trading. Because there is no holy grail. It's all about probabilities. And many people fail to understand such a simple fact, including me in my early stages learning how to trade, where coming from engineering, I wanted the sure thing. And I was fighting against that fact until I took some coaching where my trader coach, I'm talking about psychological coach for traders, my trader coach ended up helping me to develop a much useful mindset, which is the mindset of a trader, where everything is about probabilities and we have a carefree state of mind. So that's what you need to develop. Okay. By the way, I didn't say it. Another thing that we're gonna do in 2020 is more psychology stuff. Please, in the chat box, type, if during the practice that we have done this year, type if you have realized the importance of trading psychology, type that from 0 to 10. And if you have not realized the importance of trading psychology, please type 0. I would like to see what are your rates. From 0 to 10, how important trading psychology would you say it is? Please type it in and I will read later on. Okay, so more comments. Let me see. Was you said, my first time here, where do I get the previous record? Oh, exactly, was you. This is exactly what I meant earlier. I said Ricky before and I meant was you. Okay, so you will want to use our YouTube channel. Okay, so this is where you find it, youtube.com/c/tradewithufos, and this is where you can see all the recording, sharpening, short-term live trading, and long-term live trading. That's where you have it. Okay. Jose, yes, I answered that already. Paul, I did answer that already. Good to see you, Marcus. I'm just reviewing everything. Let me see. Got it. Why you, Jose, regarding auto climate, the mentioned current candlestick, I thought it should be for instant execution. If use limit order, it can be taken another 4 or maybe 6 hours later. Yeah. So remember, let me rephrase it, okay? And I think that's going to be the best way to explain it and is well understood. So I'm going to explain it in the context of the flowchart, okay? The flowchart, okay, the first step of the flowchart, if I zoom in, right? Notice how it says the first step of the flowchart is to use the common time frame to go ahead and check climate. That's the first step, okay? But notice how this answer, where the climate is confirmed yes or no, that answer is only valid for one duration of one candle in the common time frame, because the whole trading process, the whole flowchart process restart each time we have a close on the common time frame. So what does that mean? Let's say I trade the common time frame 240 minutes and I am planning a trade on the GBP CAD. So what does that mean? It means that each candle lasts 4 hours. So if I was to look at auto climate right now, it's telling me a thick dot blue color. So thick dot blue color means what? Thick dot blue color means that it's time to go long and the climate is confirmed. So if I was to look at the answer, it says, is the climate confirmed? Yes. So then you progress and you go find the target, find the entry, and you just keep doing the process. So when do you do the process? Right now. And if the process end up doing what? The process end up, you go down, right? You go down, and then you define quantity, size, safety target, and then you go back up and then you execute the trade. And you may get filled or you may not get filled. And this brings you back to the common time frame, which is the beginning part of the process, right? So in other words, if I find a trade now and the whole process gives me a valid setup and it's time to take the trade, that setup is valid during the remaining minutes up to 240-minute time frames. In other words, if that candle just started, I got 4 hours to get filled. If that candle started 2 hours ago and is a 4-hour candle, I still got 2 hours to be filled. If that candle started 3 hours and a half ago and it's a 4 hour time frame, I still got 30 minutes to take the trade, right? But the moment this candle closes and a new candle begins, I will need to reassess auto climate, and therefore I go back to the beginning and I restart the whole process, and therefore I got myself given another 4 hours to do the trade. Okay, now 4 hours is if you use 4 hours as a common time frame. If you were using 60 minutes as a common time frame, then everything is done every 60 minutes, right? So that's what it is. If you use the daily for the daily time frame, the daily time frame for common time frame, so everything is done and resets every one day, etc., etc. Okay, so hopefully this answers your question as well. Good. Keep going. Let me see. Oh, by the way, I see your answer, Ray. Thanks for working with me on that. Yes, Dirk, you are talking about Clubhouse sessions. Obviously, Clubhouse sessions are outside our community, so um, many of our app users are not connected with this type of tool because it belongs to a different company, isn't it? Um, yeah, Mark. Yeah, Slack is certainly a tool that I'm reading your comment, Mark, about using Slack. I'm guessing you are talking about the sessions that Chuck Phillips is running, isn't it? Certainly, you can do that because this is outside of a private environment, so you can do that with Slack. So, yeah, you feel free to share that information on the chat box. No problem at all. What else do we have here? Oh, I see that you were commenting on the email. Very nice of you, Marks. Thank you for that. Irwin, hi Jose. If, for instance, our monthly target is 5%, if a third week we have already achieved it, should we skip the fourth week? That depends. That depends. It depends on how you set your target. In my plan, in my goals, my target is to reach a minimum of a quantity. I don't set myself a maximum. And that is because I trade my money. So if I say I want 5%, then it would be at least 5%. So if I made 5% in 3 weeks, week number 4, I keep going, and I may end up with 7%, I may end up with 4. Okay? But now a different story is that if you trade other people's money, so probably you are giving your customers a specific expectation of profitability, and what most fund managers would do is then to just cool down those trades for the last week because they reach the target, so they take the money and they run, and they just wait until the next months begin so they can again produce performance then. Okay, so you have it's two different approaches. To me, when a person trades their own money, I mean, if your methodology is good, why would you stop trading? So I don't see the point. At the same time, I could understand that point if you trade other people's money. Okay, very good. Very good. Just reading, catching up, guys. Yeah, Mark, you guys keep talking about the Mastermind Clubhouse, and many people in our community, actually the majority of our app users would not know what that is. Okay, it happens. It happens to be a place we know well because I was there and part of this too before. But just keep in mind that many of our members are not coming from that particular place. Okay. Let me see. Keep going. Keep catching up with the chat box. Very good. Yes, Muklis. I see that you had to go. Nice for joining us. Ricky, thank you, Jose. Yes, I do know. But when was the flow chart updated, sir? The flow chart was updated somewhere towards the end of October. We did a minor change on the flowchart out of learning from you guys, where we kept receiving a lot of emails showing some level of confusion from the prior flowchart, especially with the use of the timeframes. So we basically removed one step and a slightly different approach of the timeframes to use for targets. And we basically had a little simplified version of the flowchart. That was the end of October. By the way, if any of you need any file that I'm showing you, like the flowcharts, anything, just email reach@tradewithufos.com, and we will send you that information. More than glad, okay, including trade station scanners. Okay, I'm seeing your message, Wasu. Please send an email because I cannot do it right now as we speak. So and also I have a team that takes care of that. So please go ahead and email reach@tradewithufos.com, and they will be more than happy to send you that information. Paul, so higher calibration in theory would be better. Well, it would be better if you have a higher probability, but so it depends. Let me explain. It's like everything in life, okay? Since we deal with probabilities, everything has pros and cons, okay? So let me explain that so you understand the impact and you can have a proper decision for yourself. So what do I do when I myself run the long-term sessions and we do iron condors, for example? What do I do? Well, I have a rule that says that I will not do an iron condor unless I have at least 2 UFOs. At least 2. For example, if I want to do an iron condor, expecting price to stay between 32.54 and 32.24, well, that would be an iron condor I would feel comfortable doing. Why? Because if price falls, I got 1, 2, and 3 UFOs that each got 73% probability to push price up. And if price goes up, I got 1, 2, and 3 UFOs that all have 73% probability to push price down. And pushing price up and down means time passing, and time passing means higher probability of reaching expiration. Okay? So what gives you more probability? To adjust AutoUFOs to get that number to be, let's say, 75% and only have 1 UFO here? Or adjust AutoUFOs in a way where you have a probability of, let's say, 60, which you may feel is less. But now, remember, we said lower calibration settings typically give you more UFOs. So now you have 3 UFOs that each got 60% probability of pushing price in the opposite direction. What would you prefer? 1 UFO with 75 or 3 UFO with 60? I personally would prefer 3 UFOs with 60. You know what I mean? So again, it's personal preference. You also need to practice with the tool to understand its use and like everything in life, it's just I'm a very, very intense fan of motor racing and Formula One. And before a race, pilots will adjust their car settings, the wings of the car, the pressure that they put in their tires, etc. All of these will be adjusted before the race for each track, because each track got different characteristics and they adjust the cars for the race and then the race. So spend time adjusting your car and then race. That would be my suggestion, now that you know more about the philosophy of calibration and UFOs and everything. Paul, so it plots orders only made within, say, yes, you're correct. Paul, SPX, unfilled orders, they are non-SPX orders. So what info does the UFO use? Yeah, you are correct. So the S&P, how do I put it? So what goes first, the egg or the chicken? So the S&P is an index made of 500 stocks. So is the index something real because you got stocks behind it? Or are the stocks and the index moving because people trade index futures and index options, and therefore the index moves, and therefore you have a cascade effect affecting the price of those stocks? To be honest, I don't know. And in my mind, I would feel that sometimes the egg goes first, sometimes the chicken goes first. I have no idea. But the app is certainly looking at everything out there. And specifically, the index are made of stocks. And so what the app is doing is looking at market data, assuming that movements on the SPX were made not only because the SPX moved, but also because certain levels of orders were generated in stocks that are relevant to the index, and therefore, there is kind of a, let's call it a reverse engineering process that the app is running, identifying where those unfilled orders potentially should be. Okay, again, everything that AutoUFO does is an assumption that brings with it probabilities on our end. We don't know for sure, for real, forever, that the unfilled orders are there and will remain there. The app identifies unfilled orders because there are traces of information that suggest unfilled orders should be available at that price and of a certain quantity. Could those unfilled orders be canceled? Yes. Could the app give too much weight maybe to Apple unfilled orders, and next thing you know, something happened to that stock and orders were canceled, and that day the S&P does not react because of whatever happened to Apple? Yes. That's why we don't get 70. That's why we don't get 100%. Okay. But in the end, with all the analysis that the app is doing behind the scenes, you have this assumption that throw that drawing on the charts in the form of green and red areas, which represent unfilled orders in the market. Very good. Hélène, Jose, do you trade sharp patterns at all? No, Hélène. And here is why. And by the way, there is nothing wrong with it. But here is why. If you think of business like all businesses, how do I put it? Let's say, for example, a shoemaker. So you have the factory that makes the shoes. Then you have the import-export company that export the shoes. Then you have the distributor and the company that takes the shoes and distributes the shoes. Then you have the retail shop that buys the shoes and sells the shoes in the shop. And then you have the buyer of the shoes that goes out there to buy the shoes. So the first guy in the chain is the maker of the shoes, right? So those are the ones that get the shoes at the best price. And the last person in the chain, which is the person who actually wears the shoes, the customer, okay, the buyer of the shoes, that is the person who gets the shoes at the worst price. So in trading, what do you want? To get the best price or the worst? Of course, you want the best. What's the issue with chart patterns? The issue with chart patterns is that almost always you put yourself in a position where you are guaranteed to not to get the best price. That's the problem, because every single trading pattern in the world would be traded as a breakout if you do it like it's done in the books, okay, which is what normally people do. So maybe you're looking at so this one here, for example, I'm just again, it's just an example. So you have a move up, right, and then you have a move down, right, and then you have another move up, and then you have another move down. So if we were to talk about chart patterns, okay, everybody in the world would call this a double top. So what's the expectation? Well, the expectation of the double top would be to reverse the trend if the bottom support was to be broken. So it did not happen. So you were supposed to take a breakout trade to the downside, but it did not happen. So what are you supposed to do if a chart pattern fell? This is a failed chart pattern, because, by the way, trading patterns can be done in two ways. You can trade the pattern or you can trade the failure of the pattern, right? So a technical trader will do both. So what could you do? Well, if this double top is proven to fail, then you can trade the failure of the double top, and therefore you would buy here. Okay, you would buy here, and you could make a very nice trade. So, as I said before, trading patterns is not a crazy thing to be done. But what's the problem? You purchased at 32.40 instead of purchasing at 32.33, right? So again, I'm not sure. I mean, I cannot rewind. If this was trading view, I could. Okay, but let's pretend for a minute that at this moment in time, okay, let's pretend for a minute that at this moment in time you had some UFO here, Okay, so you could have bought inside the UFO and make all this profit, and you would have bought at 33 or something like that instead of buying at 30 to 40. So you didn't buy the shoes from the retail store, you bought the shoes from the import export company. You get a better price. Okay, so I'm not a fan of chart patterns because of that reason, even though it would not be crazy. And also, by the way, if you want to do that, again, nothing wrong. You could certainly do that. So you have this double top, price breaks the double top, and same for candlestick patterns. Okay, we are talking about chart patterns, but it could be candlestick patterns as well. The dojis, the shooting stars, the harami, all those different chart patterns. You can do the same. So let's say you're gonna take the trade here, okay, and let's say, again, I cannot go back in time, but let's say that the next red UFO is here. Okay, so let's say this is the next red UFO. So what would you say? You say, well, it makes a lot of sense to take the trade, where the purple round circle is, because if the next UFO, the next sell orders are located all the way up here, so I can buy at 40 and I can sell at 53, so I can make 13 points. So let's do it. Okay, so you can do a breakout of the chart pattern, and that would be a smart breakout. But what if the red UFO is there? Well, if the red UFO is there, okay, probably you should restrain yourself from taking this trade, because if you take this trade, probably price will get from 40 to 41 and then reverse and go back down, because there are sell Unfilled orders, which was not the case that time, but let's pretend it was. Okay, so again, I'm not a fan of chart patterns, because even though you can get a good exit price and a good trade, the problem is that you don't have a very precise entry point. And on top of that, you may get slippage because you would enter with a market order, and again, you have some disadvantages. So I prefer to approach it differently. Okay, so that's the answer to your question, Ellen. Again, nothing wrong, but there are, in my mind, better ways to do it. Orlando Jose, thank you for everything you have done for us in 2019. I have learned a lot from you. Happy 2020 and beyond. I have to go now. My pleasure, Orlando. You are amazing, my friend. You're a good example, very good example for many other students and traders. So good job and good luck to you, and Happy New Year as well. Okay, so I'm getting to the point where you guys are talking about the importance of trading psychology, and everyone is talking about 10. Someone said 9. Okay, but I would say the average is certainly 10, not 9. Okay, so all of you understand the importance of it. Okay, and certainly it's nice to see, because many people fail to understand that. Okay, so yeah. So anyway, let's go ahead and continue. Well, the reason I was asking, by the way, is because I was telling you that in 2020 we're gonna add plenty of sessions and a lot more stuff related to psychology. There'll be sessions where we don't use the UFOs, so be ready. Okay, this year we have been using UFOs all the time, so we'll still we'll get together, and in this case without the UFOs, only to talk about us, the human beings behind who we are. Okay. Wasiu, where do you download AutoUFOs? Okay, probably the easiest way to do it, I'll type it in the chat box, is to use www.tradewithufos.com, which is our website, and then you just select join. Okay, and that would be how you do it. What else? Marcus, how about sensible, hopeful? What is more important, strong, weak, or sensible, hopeful? Strong, weak is more important. Actually, if you remember, Marcus, the prior flowchart that we had, we had a different condition for strong and weak, isn't it? And with the current flowchart, we just focus on strong. I mean, there are multiple reasons for that, which I described before, so I'm not going to repeat myself. But strong and weak is more important. Okay. Having said that, hopeful and sensible, it's also important in the sense that the job of a trader is to maximize the amount of money you make. You want to be realistic with your profits you make, but you also want to try to maximize how much you make when you make. Okay, you don't want to exit a trade for a small profit every time. It's okay to have a small profit, but every time would not be okay, because then you take a loss and it's too painful. So hopeful trades decrease the probability of a greater profit. They don't decrease the probability of a profit, but they decrease the probability that the profit will be great. So if you enter a trade when it's sensible, you are likely to reach safety target, but you are more likely to hit your final target. Where if you enter trades that are that are hopeful, you have the same probability to hitting your safety target, or a similar probability to hitting your safety target, but then the probability of hitting your final target is way, way, way less. So that's why it's important, and that's why we have rules around that. Okay. Seems that we have very few questions left. Okay, guys, I'm aware that we are 2 hours and a half into the session, so we're about to complete the session for today, guys. Okay, so just a few more minutes and we're done. So what is shown in TradingView sometimes different in MT4 due to different broker. Is there any broker connected to TradingView? I'm not using TradeStation yet. Yes, for Forex, you basically have two choices. Choice number one. So when you use Forex, there is one very relevant broker that is very good for Forex, and you could certainly use. So you come here to trading panel, and when you see the list of brokers, okay, one very relevant broker for Forex is Oanda. Okay, Oanda is a very good Forex broker. Forex.com is normally quite wild with the spreads, so I'm not a fan, but Oanda is pretty okay. So you have the same data fees and you have the execution, so that's fine. Saxo Broker is another very good broker, even though keep in mind that in the US you will not be able to use it because it's technically a CFD broker. It's a broker for contracts for differences. So you trade euro, so it's not the euro, it's the euro CFD, right? So which is the same, but it's not the same product. So that would be for non-US residents only. And then the other choice, which really is my favorite choice, again, remember how I told you I don't like to be depending on brokers, even though, of course, I have my preferences, but I don't like to be depending on brokers. And also the importance of trading psychology. My favorite choice is not to execute with TradingView, even though it's nice. My favorite choice, and some of you have been in the, remember I told you that I'll be running a Forex course in 20 and 24 of January, which I did again in November, end of November, we did it online. So in that course, you probably remember, if you were a part of it, that I was teaching students to do the analysis with TradingView and the execution with MT4. But listen carefully. The planning with TradingView on your computer screen and the execution with MT4 on your phone, not on your computer screen. Why two different devices? Well, because that way you separate the planning and the execution. It's like, imagine you work for a hedge fund and you're a hedge fund market analyst. You would do the analyst and you would give the result of your analysis to the trader who executes the trade, but you would not execute the trade yourself. So in order to, and by the way, what would be your emotional attachment to trades? None, because your job is just to do planning. So what would you do? How can you mimic that at home? Well, you do the planning with TradingView on your computer screen and the execution on MT4 on your phone, different device. So there is a time to plan, there is the time to execute, and those are different times. This is going to make a difference, especially when it comes to managing emotions. So that's my suggestion. Therefore, you don't need the broker to be connected to TradingView. I get your point. Different brokers got different data fees, but at the same time, if you use a proper broker, okay, the one I was using in that course, for example, was AxiTrader, which is a broker from Australia. If you use a good broker, we were seeing spreads that were zero, right? 0 pip spread, 0.1 pip spread for the euro. So, you just add a little wiggle room to your trades and you don't care that other brokers may have different fees because you have such a good broker with really, really good execution that you should be fine, okay? So that would be my approach to your need, okay? Very good question as well. Very good, very good. Paul, thanks for your thoughtful answers and patience. I ask a lot of questions, inquisitive by nature. Love that, Paul. Love that. Okay, that says a lot about you, and I certainly welcome that. Certain questions definitely are to be answered in this type of sessions because sometimes it's difficult to answer certain questions in an email and give a complete answer. And instead, now you have an incomplete answer and then you get in trouble and then you wonder why. So I like to take, just like you like to take your time to ask questions, and many, I like to take my time to answer so I can be accurate. Okay, and hopefully you also appreciate that. So thanks for your comment very much. I have some friends who are beginnings in forex. Can I refer to them your class course? Yes, of course, I would love that. Please shoot an email to reach@tradewithufos.com, and we will lead them into that course. And as well, if you want to join us, it'd be great. Paul, what ES to use for TradingView? Yeah, for TradingView, it would be you just come in here and you type. The best way to do it, the fastest way I do it is type ES. Okay, and if you are not using the all tab, because if you are using the all tab, automatically you'll have S&P 500 mini. Okay, well, if you are not using all, when you type ES, you just type futures, and it's going to show up on the top of the list no matter what. Okay, and then you have a drop down menu, and depending if you want to show the current contract or you want to show the continuous contract, okay, which is ES1 exclamation mark. So you just click on it, and now magic, here is your UFOs, here is your chart, here is your climate, everything is there. Good. Ricky, hi Jose, what platform do you suggest using for trading options? And thank you very much, sir. I love TradeStation. You know, in the industry, TOS has probably the best reputation for options trading. Second, Interactive Broker, especially if you are dealing with multiple accounts and hedge funds and stuff like that. And TradeStation is very well known for futures and stocks, but not so much for options. Well, I have repeatedly executed trades at the same time with TOS, Interactive Brokers, and TradeStation. And every single time, 4 years, not only for 1 week, I've seen better fills with TradeStation. Get filled at a better price, get filled at the midpoint, miss the fill with IB, miss the fill with TOS, get filled on TradeStation. It happened so many times that to me is probably the best execution. And nowadays the execution is free for options. You pay 50 cents no matter the contracts, and that's it. So so I recommend you that. Okay, but anyway, in the end, you are trading an exchange traded product, so you will not have that much difference between brokers. Okay, it's more about the commissions, and now they are free. So let me see. I love TOS, Paul. Yeah, I mean, it's very user friendly. Let's face it, TOS is probably the most user friendly for options trading. Mark, but you mean have the broker MT4, so one down MT4 in the USA? Yes, that's what I mean, Mark. Devan, how are you, Devan? Long time. Jose, what's your favorite strategy, options and futures? Iron Condor for options and long and short futures. That would be it. Why you, Jose, got it? Appreciate and many thanks. My pleasure. Ellen, on the same line of brokers, which with TradingView, what do you suggest for futures in Canada? Well, TradeStation is not possible, right? Because TradeStation is available inside TradingView. Here, I'm sorry for that. Let me get back to the list. So I've seen residents of Canada use TradeStation, but in most cases, I understand that it's not possible. So even though it's there, it's not possible. Okay. So AMP is a good futures broker. Okay. And Tradeovate, I have not tried them, but I heard many people talk good thing about them. So I think you can give it a try. Worst case, okay, so let's say you don't find a good choice, whatever. Let me tell you this. Most serious futures brokers, okay, they will give you access to a platform called CQG. So CQG is normally a platform not used by retail customers. Normally is used by hedge funds, very serious traders. It's not a common platform. Okay, NinjaTrader is more or less common. CQG is not so common unless you go like pretty high on the hierarchy of traders. Okay. By the way, you know if your future broker is a serious broker if they offer CQG, because that means that some of their customers are funds. Okay. Because they demand that platform very much. And the reason why is because that platform's allowed to connect accounts, allows to do lots of fancy things. It's programmable, blah, blah, blah. Really, we don't need that much. To be honest, TradingView is more than enough. But, it's a good to know that a future broker provides CQG because it says a lot about that company, right? But what's the beauty? Well, if you pick any futures broker and they give you CQG, not only you now deal with a good futures broker, a likely good future broker, the beauty is that you could ask them to activate CQG. And even though you are not going to use CQG, you use the CQG bridge to connect that broker into TradingView. And basically what that does to you is that now any worldwide future broker, which is serious, can be your future broker. Even if they're not in the list, as long as they give you CQG access, you can use the CQG bridge to connect to them. Okay, so I would suggest to consult with the futures brokers in your area. And again, if there is a broker that seems appealing to you, commissions are good, whatever, but you don't know anyone who use them, but they have CQG, well, that's kind of like they just gain points for you because again, CQG means hedge funds use them. Okay. Yeah, I don't think IB offers CQG. I don't think so. So you will need to find another one, okay? And again, if you want to keep it simpler, so AMP, they are certainly okay. And Tradovate, again, I heard good information about them. I don't know them. I never use them, so I don't know. But AMP is good. Anyway, my friends, so we are done with today's session. That was 2 hours and 40 minutes. You guys are the best, okay? Because all of you are still here, okay? And some of you had to go, and the ones that had to go, they said bye because they had to go. Probably family matters, Sunday matters, and it's understandable, my friends. But everyone else is here, so you guys are the best. Your level of commitment will pay. I can tell you this, and it's great to see, and I love it. Okay, so keep doing that. We'll see you again tomorrow. Tomorrow we have our last session of the year. It's gonna be short-term trading. We're gonna be dealing with the futures and the forex. And we will conclude the year in this way. Okay. Clievo FX, hi Jose, when using AutoUFOs in TradingView for US stocks, do we need to activate the pre-market data? It's activated automatically by free, if I'm not mistaken. If you load a chart for stocks, for example, Microsoft. Okay, if you load Microsoft, for example, automatically here it shows market closed. Okay. But when the session begins and it's pre-market, it will show here pre-market. So automatically it's activated, if I am not mistaken. Okay, so you're good to go. Very nice, everyone. My friends, again, super pleasure. Keep up the good work. Enjoy the rest of the Sunday and see you tomorrow. Bye-bye, everyone. Take care.